Welcome to part 13 of our financial statements video training. In this video, we continue discussing the cash flows from operating activities, followed by the cash flows from investing activities and the cash flows from financing activities. We also show how the statement of cash flows is used to judge the quality of a company's earnings. Please print the PDF handout shown below this video, as it will be used throughout the training.
Okay, let's go on to the accounts payable. Now, if accounts payable goes up, do you think that's good or bad for cash? Well, if accounts payable goes up, that's good for cash, right? That means we didn't pay any, right? So if your accounts payable goes up, you still got your cash because you didn't pay it. If accounts payable goes down, that's not good for cash because you just wrote a check and paid the payable down. So liabilities are going the same direction, right? If you increase the liability, that's a positive. That's good. That's an unbracketed number. Okay, so now let's go to the total then, cash from operating activities. $76,759 is the adjusted number. And again, thank goodness we don't have to prepare the statement. But since somebody is preparing it, we're going to want to look at it. After we enter the other current liabilities amount of a negative $650, we add up this column and we get to the total of cash flows from operating activities. And the number is $76,759. Now, that number is less than the income statement number, right? So the accountant's income statement showed $86,832 of net income. Remember, that's revenues minus expenses. But the cash that was generated from operating the business, the operating activities, was only $76,759. So that's not real good. We would have thought there'd be at least $96,000, wouldn't we? Because there was net income of $86,000, and then that $10,000 of depreciation didn't take any cash. So why don't we have $96,000, right? Why do we have $76,000? So that the fact that the $76,759 is less than the $86,832, the fact that the cash flows are less than the net income is a kind of a red flag. Why is that? Why wouldn't we have more cash than net income? Especially since our net income was reduced by this non-cash item called depreciation. So again, we would have expected that after adding back the non-cash depreciation amount, we would have had $96,832 of cash. More cash than we had when we started the period. But we see that the cash flows from operating activities is only $76,759. So that's going to get some people's attention. Are the accountants kind of faking the sales? They're not really collecting them, they're booking them, but it's questionable whether they're going to collect them and customers are not paying? Is there something wrong with our products at this company? Is there something wrong with this company's products that customers